Can you tell me what was driving you to take such a risk?
I was 35. I wanted to kind of own my career. And I thought if I join another company 5, 6 years later, something was gonna not work out. I never thought of myself as a real risk taker. I just didn't know. But if you think that way as an entrepreneur, you never do anything. You need to be comfortable with going to clients with something that at the beginning, particularly, maybe it's not perfect. I spoke to 125 investors. 124 said, no, thank you. I hear a lot of people saying, hey, I want to be an entrepreneur to make money.
No, that's not the case.
Impossible that you're going to go through the rejections if that's your goal.
Yeah.
You need to be
That's true.
extremely passionate about the problem you're trying to solve.
Michele, 2018, I landed in Singapore and I found out about StashAway, and this is how I discovered the world of investing. Thanks for taking the time. Such a pleasure to have you in person. I think it's much better to do it in person.
Absolutely. Thank you so much for having me.
Yeah, so I'll start from what you are doing now. So, 2016, you left a high status job at Zalora Group as the group CEO in Singapore, and you took a risk to do something completely different on what you used to do. Can you tell me what was driving you to take such a risk and go for something like that and live in such a high status job at Zalora Group?
Look, it was a bit of a journey. And, I was 35 at the time. So I was not your 21-year-old kind of dropping out of university
Yeah.
type, right? And I was 35. Had been working for, more than a decade. And I never thought of myself as a very, as a real risk taker. So what actually happened is that the Zalora job as a CEO, and before that, I spent a year at Rocket Internet. So Zalora is a Rocket Internet company. So a total of 5 years at Rocket Internet was a little bit of a step into entrepreneurship from a more professional job. I used to work at McKinsey and been a private equity investor before then.
Yeah.
So those 5 years kind of taught me a lot about building and scaling up a company and gave me the confidence that I could actually do it. And so when for a number of reasons, I was leaving Zalora and I was thinking about, okay, what do I do next? I did consider kind of thinking about joining another company. I had a good CV at the time, right? At the
Yeah.
time, and something would have come up for sure.
Yeah.
But I had two thoughts came to my mind. One is I was 35. I wanted to kind of own my career, and I thought if I join another company as the CEO or the CEO, whatever,
It will be the same like Zalora.
5, 6 years later,
Yeah.
something was gonna not work out for whatever reason, and so I would have to, again change job, and then maybe I would have another one, another 4, 5 years, and then at a certain point I would be in my mid 40s, which is where I am today. And then I thought, okay, maybe then it would be difficult to find the next thing, and so I thought actually it might make sense to build something and build my career around that. So that was the again professional choice in a way, and the second piece was about people. So
Mm.
for me, people has always been a very strong motivation. And while I really enjoyed my time at Zalora, it was a fantastic experience. I learned a lot. I was clearly out of my depth at the beginning, and I, kind of, I owe a lot to Rocket Internet for allow me to have that opportunity.
Yeah.
The one thing I didn't like about it is that because we were a management team that was assembled a little bit randomly by Rocket Internet rather than by someone hiring people that
Yeah.
wanted to work with, there was a lot of politics, there was a lot of issues,
Of course. Yeah.
and I hated it. And so the second piece was I wanted to be in an environment where I could pick people one by one.
Mm.
I wanted to be in an environment where I loved every single person I work with. And you can really only do that if you start your own company. I mean, it's very difficult to do it if you join another company. And the third piece was the subject that I wanted to work on, right? So I had been struggling with doing the right thing with my own money.
Yeah.
I had a very clear idea what I wanted to do with my own savings, but at the time I was in Singapore, and the banks in Singapore were making my life impossible to do the right thing. So I was
Everyone, not only sick.
yeah, I know everywhere in all of our markets for sure, and so I knew there was a problem. The idea of helping people build wealth and build financial peace of mind, that's a little bit how I think about it, is something that I really like and I really thought had some kind of deep meaning to me. And I saw my dad had issues financially over the course of his life. And so this is something that I care about also from a personal story perspective.
Yeah.
And so when I realized there was this opportunity, nobody was doing this in Singapore, I thought, okay, this is a large opportunity. I have 5 years now of experience building companies. Like I know how to do that. I know what the next step is. And it really connected to my idea of, let me actually pick the people and start from there. So those are the three reasons.
Do you think that the experience that you've got from consulting, in particular with McKinsey, and then investing in private equity, operating those internet companies and e-commerce giant like Zalora, do you think the combination of three helped you to scale what you are doing at StashAway?
Absolutely. I mean, there is a famous quote of, you can only connect the dots looking backward, and which
Mm.
is very true in my case. And I think I learned very different things along the way. So McKinsey, which was my first employer, I spent around 4 years between Milan and New York, taught me a bunch of things. But the two things that I think are most important to my job today are one, work ethic.
Yeah.
So it's kind of normal to me that you work 12, 14, 15 hours a day. And I realized later in life that it's actually that not everybody thinks is
Yeah.
normal.
Yeah.
And that's because it was my first job and that was the expectation. And so I never challenged that expectation. And that, having that ability, that stamina is something that you need to do if you want to start
Yeah.
something from scratch. So work ethic is definitely something I learned at McKinsey. And the second piece is structure communication. So while I was born analytical, so I like numbers,
Okay.
I don't think I was born structured for what concerns communicating. And structured communication tends to be clearer. And so this is something that I think I learned at McKinsey. So those are the two main things.
So
They-
work ethics, structured communication,
Correct. Those
McKinsey.
are the McKinsey. Private equity, importance of cash. Because when you're at McKinsey, you live in this bubble where the real world doesn't exist. The world works in PowerPoint.
Yeah.
And so, cash is not an issue. While when you're in private equity, you
Cash
know,
is the most important thing.
correct.
Is games.
And I was a director in a couple of companies, and especially, this was both companies actually had some issues. And so I was working closely with the CEO on thinking about how do we make sure we pay salaries next month. And so the whole thing about cash flow management and making sure you have
Yeah.
cash in the bank and how you, renegotiate that with the bank and
Yeah.
things
Yeah.
like this was very, very key. And obviously, it's very important once you become an entrepreneur.
So I think this is the most important part that an entrepreneur should keep an eye on daily basis. It's
Yeah,
cash flow.
absolutely. And also understanding how to optimize it and understanding what you can do about it. Right?
Yeah.
And also, even when you think about a business model, how do you make sure that your working capital helps you?
Yeah. Yeah.
And the second piece from private equity was understanding and negotiating legal contracts. Again, at McKinsey, you never look at legal contracts. You live in this kind of a PowerPoint
Yeah. Yeah.
bubble. But when you execute things, you need to, negotiate things with
Negotiate.
partners, with
Yeah.
investors, with
Yeah.
employees, and
Yeah.
whatever.
Yeah.
And so being able to read a contract, understand it, negotiate it, understand what's important, what's not important, and negotiate the important pieces is extremely important.
Okay.
And I learned that in my private equity days. And then I spent time at Rocket and Zalora as part of the Rocket experience. That's probably the most important of the three experiences for what concerns my ability to be an entrepreneur. The first thing I really learned at Rocket was I had to unlearn some of the attention to detail or attention to detail that don't matter that you have at McKinsey. So at McKinsey, you don't go to a client presentation unless on the appendix of page 67 on the footnote of page 67 of the appendix, there's no double spacing. But if you think that way, as an entrepreneur, you never do anything. And you never go live. Like you're always going to be, oh, let me optimize that, which doesn't work. So Rocket was a little bit about, okay, obviously the bar needs to be very high, but needs to be very high on what matters.
Mm.
And then you need to be comfortable with going to clients with something that at the beginning, particularly, maybe it's not perfect yet.
Of course.
But you go live, you get feedback, you improve it, and you get more feedback, you improve it again, and you get more feedback, you improve it again.
Yeah.
For Rocket, obviously, I could spend an hour
Yeah.
talking about how much I learned at Rocket. It was probably the most important experience when you think about my entrepreneurship step that I
Yeah.
that I take after that. Maybe three things I highlight. One is unlearning the McKinsey level of attention to details that might not matter.
Yeah.
Example is that when you're at McKinsey, you don't go to the client until on the footnote on page 67 of the appendix, there's no double spacing. You do that as an entrepreneur, you never launch, you never go live, you never go to a client. So you can't do that. The bar needs to be high, but needs to be high for the most important thing. You need to get comfortable with the idea that you're gonna go live with something that is not perfect,
Yeah.
and you're gonna get feedback, and then you can improve on it, and then you're gonna get more feedback, and then you can improve again on it. So there was number one is unlearn this kind of a or maybe learn to go live with things that are not perfect yet.
Yeah.
The second piece is was the first time that I was managing large teams of people.
Yeah.
Zalora had 1,500 employees, and before that, in private equity, I had maybe one person I was managing, and in McKinsey, like 2, 3 people. So, for the first time, I was managing a team of different people. Like, we're not all consultants, all very motivated, all willing to work 15 hours a day. So that was very important. And third, fundraising and dealing with investors, which obviously has been important as we raise quite a bit of money at StashAway.
On StashAway, I'm sure you faced a lot of challenges when you started the company. Do you remember the first month of StashAway? And if you can tell me just roughly what happened in the first 4 weeks or the month of.
The timeline is that I met Nino, who's one of my two co-founders, on the 16th of July, and I convinced him kind of that we could do something together in a week or so.
Mhm.
And then a couple of weeks later, on the 3rd of August, we met Freddie, who came in as a third co-founder. So Nino is the CTO, Freddie the chief investment officer. And then we actually really started. We were working part time between August and September, and then I considered the start of work 1st of October. So to answer your question, what happened in October? So we split responsibility. Nino was thinking about product, so building the product, and Freddie was thinking about building the asset allocation logic that was going behind the core product. And I was looking at two things mostly. One was fundraising, so we needed a bit of money. And two was getting the license, which was obviously incredibly important because without a license, we could
Yeah.
not
Yeah.
do anything. So in the first 4 weeks, maybe the most important thing that happened is that we approached MAS, the regulator in Singapore, the Central Bank of Singapore,
Yeah.
to get a license. If you read the regulation said that we could not get the license that we wanted because the regulation said you needed to have at least 5 years of track record, and we had zero, and 1 billion under management, and we
Mm.
had $0 under management. But anyway, we found a good lawyer that thought that it was worth trying having a conversation.
Yeah, I think this is very key. Sorry to interrupt, but this is the mindset that every person that wanted to start a company, if they go to the regulations, maybe they do not even start. And that's naivety, of founders when they do things and then they try to do the
I agree.
impossible. Yeah.
I agree. I think
Yeah.
there was a bit of ignorance here. I mean, I just didn't know. I have to give a lot of hats off to our lawyer, Stephanie Magnus from Baker McKenzie in Singapore, because she obviously knew. She thought we could have that conversation with MES, and then obviously heads off to MES because then they ended up changing the rules for us.
Yeah.
But this is I'm kind of going ahead. This happened many months later. In the first month, we approached MES.
Yeah.
We had this meeting in a room, and there were kind of two people from MES, and they were asking questions. And one of them was very constructive. The other one, not so much. So it was a very kind of an interesting meeting.
Yeah.
But in practice, we walked out of that meeting with the understanding that the three of us, so me, Nino, and Freddie, had to do a bunch of exams before even filing. So my goal was to file by end of October. This was mid-October. And they told us, hey, there is this, I think it was 5 exams that we have to take. And I was asking, okay, how much material is that? And one of the ladies from MES said, oh, it's 1,500 pages. And I was like, oh my God. And I remember, so I remember that walking back to the office as, oh my God, this is going to take 6 months. We're going to lose, 6 months of time. We don't have that time. So I was desperate. And then we got back and we said, okay, let's try to do this. Why don't, I start with, exam number 1, number 3, and Nino start with, 5 and 9. I don't remember the numbers anymore. And Freddie with, the last 2. And then each of us write notes for the others. This, remember, was pre-AI. Because today with AI, you probably would ask,
Yeah. You do it.
you would ask ChatGPT to summarize everything, but
Yeah.
it was not possible back then. So that's what we did. Well, that's what we did. And we gave ourselves a challenge to pass all exams in 2 weeks. And we did. So 2 weeks later, and so we ended up filing like on maybe the 7th of November, something like that. So we were like a week late, but not 6 months late, which was my original assumption.
Do you agree that this is the reason why incumbents are not able to transform? They think that regulator will not allow us to do this. Regulator is not allowing to do this. Regulator says no to this, but they don't do the homework. They don't go to ask for things. And I remember DBS Bank actually when they went to India to start a digital bank, there were no regulations for a digital bank. And the regulator of India actually created regulations for DBS to start a digital bank.
No, exactly, which is in practice. I mean, if I fast forward a few months, then we got in principle approval for the license, and then we had to raise a minimum $1 million for the minimum capital. And once we got it, we got the minimum capital, we got the license. This was on the 30th of May, 2017. A week later, MES issued a consultation paper saying that digital players with these characteristics can now get this license. So
Mm.
we were the guinea pig in practice. So they kind of changed the regulation around, and we were very lucky, most probably, that we kind of approached MAS at the right time.
Yeah.
They had, I'm assuming, they were thinking about this already, and we probably helped in shaping the logic behind
Maybe
it.
because of Soprando as well. His
Yeah, yeah,
mother.
yeah. There was a bit of push at the time on fintech. Again, I think we were lucky. We were probably talking at the right time, and MES was honestly incredibly open to this, which was
So
great.
started in October, got the license in May, and then you go to market.
Correct.
And to until now, what I see is a very well put together team. Very well structured. Obviously, to pass the exam in 2 weeks is not easy. Now, what would you change if you go back to 2016 and you started working on this?
Not much, to be honest. I think, honestly, I wouldn't change anything.
Yeah.
The one very difficult thing of those 9 months was fundraising. So we had to raise at minimum of $1 million for the minimum capital requirement, plus the money that we wanted to get for kind of working capital and
Yeah.
marketing.
Yeah.
And so we wanted to raise around $2 million, and that was an incredibly difficult round to raise. We raised a bit more than $500,000 very early, and that was actually, that kind of led by me. So I was the biggest check for that round. That was very easy. It was a bunch of angels that kind of trusted us as a team.
Yeah.
But then when we were trying to raise the subsequent 2 million, that was very difficult. I spoke to 125 investors. 124 said no, thank you, and one initially said no, thank you. A couple of months later, when I came back, when I got the in-principle approval for the license, said, "Hey, I actually got the license. Do you want to talk again?"
Yeah.
And convinced them, and negotiated the price a little bit, and convinced them to actually invest. This was a family, so the older VCs thought that B2C would not work. Yeah, and so that was the most difficult thing of those 9 months. On top of, obviously, building the product, there's
Yeah. Yeah. Yeah.
getting the license, etc. But this was the one thing that could have killed the company, actually.
Yeah. And it's interesting because every time I speak to a founder, I haven't met yet someone who didn't tell me that they spoke to 300, 400, 200 investors to get one investor to invest in them. And because of people fear rejection, they don't want to go for it. I know a lot of people that have a potential to be founders, to be entrepreneurs, to go build something very impactful. If I am today, let's say I am a CEO like you were in Zalora in 2016, or I am a managing director at a big firm or a partner at a consulting, whatever, doesn't matter. So how would you advise me to start a company today? Obviously, today is not like in 2016, but assuming I have the status that you have, so how would you advise me to go and start the idea that I have in mind, and I'm not able to do so because of the stories that we hear about rejection, how hard it is to go to market and so on.
Look, I think you're right that you, as a founder, you will get a lot of rejection, and it's going to be very hard. Right?
Yeah,
Maybe let me elaborate on this before I answer your question. So let me make it tangible. In my case, I was very convinced of what we were doing. Building a wealth management platform for people to make it simple and cost effective to invest intelligently for people. That was the idea. B2C, going straight to clients. And I was meeting all these very smart people,
mm,
and they were telling me, I don't like it. And, when you meet one, and you meet the second, and you meet the fifth, and you meet the 20th, and you meet the 50th,
yeah,
and you keep telling them more or less the same thing. I mean, you
yeah,
kind of adapt the pitch a little bit, but more or less the concept is that. And by the way, at that time, I was working without salary, and
yeah.
I had 2 kids.
Oh,
My wife didn't work. We had hired 10 people. I had invested in the company. We hired 10 people, and you keep hearing, yeah, this, I don't like it. And this is smart people. You're not like, you're talking to VC investors. This,
mm,
people, you say, okay, they know, they see a lot of companies.
mm, mm,
So actually, you need to have a level of conviction that is very, very high.
yeah,
So to answer your question, a few things. One, I hear a lot of people saying, "Hey, I want to be an entrepreneur to make money."
No, that's not the case.
Impossible that you're going to go through the rejections if that's your goal.
Yeah,
You need to be
that's true.
extremely passionate about the topic
Yeah,
that you're going to work on. Otherwise, you're never going to have the conviction to go through all of these rejections. So, conviction on the topic, passion for what you want to do and what you want to offer and the problem you're trying to solve, very important. The solution might change, but the problem you're trying to solve
is
should
that?
kind of, it's there and it's something you need to be very convinced of.
Yeah.
And, then also need to be flexible and, pivot if you need to, but you need to have some level of passion. Otherwise, it's not going to work. So that's, I think, suggestion number one. Suggestion number two is acknowledge what you know and what you don't know. And if you can, fill your gaps with your team.
Hmm.
So, and this can be co-founders or maybe just early hires. I wouldn't like to build something by myself. So I'm a kind of a co-founder people person.
Yeah, yeah, yeah. It's the better.
And that's why, I have two co-founders and, one, is a very, very, very solid and very experienced tech guy, built several companies before.
Yeah.
This was going to be a tech platform and I've never written a line of code in my life. So obviously I needed someone that really, really knew this and really knew how to build a tech product. And Freddie was our founding chief investment officer and, was a managing director at Nomura. I spent more than 2 decades investing billions of dollars. Again, I have a background in finance. I've studied finance, but I was a private equity investor, but I was never an asset allocator. I'd never managed billions of dollars myself.
Yeah.
And Freddie did. And so kind of again, we were a wealth management platform. So obviously this was a very important piece of the equation. And so finding those two people early, super early, I mean, they were actually, we actually incorporated the legal entity together. So this was pre-legal entity, was extremely important. So the second suggestion is make sure that you understand what you don't know and try to fill these gaps. I do some angel investing and one pitfall that I found in some of the companies I've invested in, some of the companies that did not do well, in many cases, the issue was that the two co-founding team at a certain point started fighting. And usually that was because they were too similar. So yeah, two people with the same background. And that doesn't work because at a certain point, just, you don't know who's calling the shots. While if you have complementary backgrounds
Yeah.
and you trust each other fully, I think that's a better setup. So that's the second piece is pick your people extremely carefully. And you need a little bit of luck for that as well.
So extremely passionate about the idea you want to work on or the problem you want to solve. Try to pick the right co-founders for you, and then you go all in. But this led me to the next thing, which is for me, the job of a founder is to build the best product possible. And then exactly what you were doing is to go to show it to customers and see if they use it, which obviously are selling your product. I have a sales background. I'm a bit biased to sales, but sales is the most important thing, what you are doing. And I'm sure in all your previous jobs, either in McKinsey or private equity or Zolora or whatever, sales is a big part of your job. How important is sales for the success of StashAway as of today?
I mean, at the end of the game, it depends on how you define sales. But obviously, you need any company requires revenues.
Yes.
Yeah, yeah. Otherwise, and so you need revenues, right?
Yeah,
And so the
yeah,
revenue
yeah.
needs to
So
come.
to get revenue, yeah.
Correct. Now, B2C companies, and StashAway is a B2C company, they tend not to have a sales function,
Yeah.
but rather a marketing function.
Marketing, yeah.
So both Zalora and StashAway did not have, or StashAway does not have a sales function. But what we do is we market and we build brand and we do performance marketing
Yeah.
and PR, etc. So obviously, it's extremely important. Now, I don't know if it's the most important thing. I would argue that building a fantastic product is maybe even more, I mean, super important and at the
Okay.
same level, if not more. At the end of the game, if you really identified a big problem and you're able to build a perfect solution, I think then the product sells by itself. That's your ideal situation, right? And I think StashAway for many periods of these last 9 years have actually sold itself because in practice, 80% of our clients were coming from word of mouth. So my salespeople have been my clients, which is fantastic. And this is driven by the fact, by the quality of the product is what drives those behaviors. So that's the
Maybe I would have used the term distribution better than sales.
Yeah.
And then you've got a product-led growth motion.
correct.
I used your product. You've got a fantastic product, from day one. But I'm sure you used some kind of tactics to get to the level of people recommending your product. I'm one of those customers who recommended StashAway
Yes.
at the early days of StashAway in 2018 and 2019. I will not tell you why I recommended that, but I wanted to hear from you first. Why do you think you were able to get the product to that level, apart from building it, from the technology side? I want to know from the go-to-market side.
From a go-to-market perspective, I mean, we did things a little bit by the book, right? So first of all, we had a very clear idea what we're trying to build.
Yeah.
So we did have top-down perspective of how the initial product was gonna more or less look like.
Okay.
But then we did, we went by the book. So we did focus group with clients. If this was even before launch, so
Mm.
this potential clients, right?
Yeah.
We didn't have the license, so invited people to the office. We saw, what worked, what didn't work, and we iterated. And then as we went live, we started collecting data, and we kept iterating and improving on every little pieces from funnel conversion to how we display returns to how we think about content, uh, how we thought about education as part of the product and as part.
That's how I learned about StashAway.
Exactly. So this
Yeah.
is maybe from a go-to-market strategy, we had a very strong angle on education. And the reason is that early on we realized that most people in this is Singapore, most people in Singapore in 2017 didn't know much, or actually they knew very little about what is kind of a right way to think about investment. They didn't know about ETFs. They didn't know why investing in stocks, like picking single stocks, might be more difficult than you think. They didn't know why investing in a recurring fashion is better than accumulating capital and then going one big lump sum,
Yeah.
or trying to time the market. So all of these kind of basic concepts were not particularly familiar, and to be honest, still the case today.
Mm.
And what we thought is, because our ultimate belief is that if you use StashAway, you will end up doing the right thing.
Mm.
The more we educate people on what is the right thing, the more people will gravitate
Mm.
toward a solution like StashAway, and hopefully StashAway specifically. And so that's why we spent a lot of time and effort in education. At the very beginning, this was a lot of seminars. This was pre-COVID. So there's a lot of in-person seminars. And I remember, we rented a pretty scrappy room in the center of Singapore. We had once or twice a week program, either mostly me, and a little bit Friday for the most technical stuff. We
Mm.
were doing that, kind of a couple of nights a week. I was giving personal finance classes and investing classes. And in the beginning, it was like 10 people, then it was 15, then it was 20, and I remember so the room probably could fit, I don't know, 50, 60 people. And I remember one night I went there and I was like, oh my God, what happened? There were like 100 people. There were a bunch of people standing. There were people out in the corridor looking and say, okay, what happened tonight?
Yeah.
And I guess it was just word of mouth, and a bunch of people kind of registered at very last minute and they came in. And it was like, oh, hey, this is something is sticking here. And I think a lot of these people then became clients, even if the sessions were absolutely non-commercial. So we did not talk about StashAway.
Wow.
It was absolutely educational. And then at the very end, we said, by the way, we are StashAway. This is what we do. If you want to have a look, download the app, do this and that. But the whole purpose was truly educational. We were not
Yeah.
in selling mode, we were in education mode.
This is actually the state of the art sales. This is exactly what founders should do. So you are solving a big problem, and you are solving one of the most complex, maybe, products in financial services, which is wealth management. Wealth management is about future. It's something invisible. It's a pain that you don't feel today.
Yeah.
You will feel it in the future, maybe 20, 30 years. So for me, I found out about StashAway because of the quality content that you put together. And you mentioned ETFs. You are the person that led me to learn about ETFs. So this was a huge part. And if you think about education is an input of the output of using StashAway for the outcome of doing let's say a retirement plan, planning for my kids' universities in the future, buying a house, whatever. So that's very key, and people they don't get this. Don't think about the outcome from day one. let's see how we can educate, let's see how we can help people to understand the outcome before we talk about the outcome. Because if you go to someone who, he's 20 and you will retire in 6 years, what you tell him?
No, you're right. That is a very difficult product to sell
Yeah,
because you're right. The pain point is in the future. You can't
yeah,
prove that the product works until, the feedback loop is very long.
yeah,
Like it's not, oh, I use it today and tomorrow I know this is great.
yeah,
Oh, you're going to know it in 5 years. Oh, it gave me great returns and
yeah,
helped me do the right thing, etc. And so you're right. It's difficult, but somehow it ended up working. And somehow people, I think, want to learn more, want to have, things in their hands. I think most of the money was and still is managed through the banks.
mm,
And people had an understanding and still have an understanding that the banks might not always put your interest first, to say it in a mellow way.
yeah,
And so, in fact, in a lot of our initial clients were actually people working in banks.
mm,
Our initial cohort was a lot of people because they know, right? They know
yeah,
better than others.
yeah,
And so at the end of the game, it kind of worked out. Now, even today, though, a lot of people still think that they can just, beat time the market and beat the index. And so there is actually a lot of people that
mm,
prefer to just, buy a few single stocks, and sometimes you get lucky and you do well. And then that reinforces your conviction that you can do it. But the reality is that doing it for 1, 2, 3 decades is very, very difficult.
Did you find any differences from Southeast Asia, Singapore market to, you obviously expanded to the Middle East? Any specific differences?
I think it's very similar. I think the offer or lack of offer from the banks is very similar. So the banks are very expensive, similar pricing. The banks tend to sell similar products or unit trust or mutual funds and structured notes. Product that make a lot of insurance products, ILPs, product that make a lot of margins
Yeah,
for the bank with stupid fees.
yeah,
I think that the level of education is similar. But rightly so. People just don't care about these technicalities. I mean, they know they need money, they know they need to retire one day, but they don't. Not everybody wants to read article on
yeah,
the macroeconomy or on what is an ETF, etc. So it makes sense.
yeah.
So no, I think actually from this perspective, the markets are very similar.
Yeah, interesting. I will go back actually to the banks. Very important, I think to talk about. So I want to switch gears to another topic, which is technology. You did well to bring a co-founder, a CTO, but I'm sure it's not enough for someone who is managing, a company like StashAway, managing billions of dollars or assets under management. And I'm assuming you're like me, you've never written a single code in your life and you don't know how to do it. How important is technology for you to be part of StashAway and succeed in scaling StashAway to what you have done today?
Super important. At the end of the day, we are a tech company.
Yeah,
And so it was very important to get a very, very, very senior tech person in the founding team.
yeah,
And, is just incredibly strong. I mean, he built several companies before, one of them was recently valued more than $7 billion.
yeah.
So, he knows how to scale infrastructure. Let's move it this way. And he's not just an engineer, he's also a product guy.
Mm.
So he understands, the concept of how to simplify a problem. It's a very, very complete
Now
leader.
about yourself as Michele.
Yeah. As I mentioned earlier, you need to know what you don't know.
Yeah,
And I know that I'm never gonna be a computer scientist because I didn't make that choice 25 years ago, which I could when I could have. And so to me, it was about finding someone that could lead this that I trust 100%, and has been that person. And then obviously we built a very large team around him. Around 50% of payroll goes to engineering and product, and it's
oh,
always been. I mean, it was pre-launch was maybe 70%, and then after launch it became around 50. When you start scaling compliance and marketing after launch, but it's been always around 50% of payroll. We always thought, and strongly believe to this date, that we had to have product and engineering in house. We never thought we could outsource it.
of course.
This was always going to be a key competence of ours. There's not one single line of code that was not written by someone employed by StashAway.
That says a lot, and that means you've got an excellent product, which you have. Can you tell me honestly, have you ever encountered a product from a bank or an incumbent wealth management firm, private bank, whatever, that matches your product. Doesn't need to mention the bank if you
No,
want.
I don't think so. From a like, if I look at incumbents, I don't think so. Then I haven't seen everything, so I'm sure there is something good out there that I haven't seen, but not that I've seen.
Why do you think is the case?
Look, I think more than an engineering problem, it's usually driven by incentive systems. How do banks make money in wealth management? They make money by one, keeping cash, so they make money on interest margin, and two, by selling expensive products, which are usually complex and are usually sold by a relationship manager or a private banker.
Mhm,
So when the bank say, "Okay, I want to go digital," they usually they have to price the digital product in a cheaper way
mhm,
because otherwise it doesn't make sense. Otherwise, you're not competitive, right? And that create cannibalization. So if you are a big bank and you make a lot of money from allowing people to do nothing with their cash and leave it in the bank, or by buying very expensive products through sold by the RM, you need to be careful when you push your digital product because there's going to be some cannibalization. And so banks have been dragging their feet on promoting their kind of digital part. What some banks have done is they've launched a digital solution, nothing great, but they've done it mostly for PR reason to say, we are digital.
mm.
But the reality is that the effort is still on the traditional side of things.
Yeah,
And look, it makes economic sense. If you can milk the cow and you can make 200 basis points or 2% on selling, unit trust, or even more than 200 basis points on structured notes, and more than 20 basis points a year on insurance products, why do you want to move to digital and make 50 bips?
yeah.
This doesn't make sense. It's a
That's
gigantic cannibalization. And so I understand that.
mm,
That's one point. The second point is that banks tend not to have a client-centric culture. Now, again, I'm generalizing. I'm sure there are great banks where,
yeah,
that
of
where
course.
in the corridors they always talk about clients. But from my understanding, in the corridors of the banks, people talk about how do we increase revenues. They don't talk about how do we solve the problem for the clients most of the times. And that creates a very different way of building a product.
Yeah. I remember actually something, I'm not sure if you recall that. So 20, maybe 2021, one of the banks in Singapore, I will not mention the name, did a campaign, don't stash away your money, instead invest it in this bank, which means don't don't put your money at StashAway, but come invest it with us. And I still remember when you reposted this thing or something. Do you remember this?
Yeah, yes, I
Yeah.
remember. Honestly, it was great. It was a
They
recognition.
did a campaign for you and they didn't know that.
No, but also was a recognition, right?
Yeah,
There's a
yeah,
bit of a recognition of the fact that we were
yeah,
becoming, I mean, we were very small compared to the bank,
yeah,
and still the banks noticed us, and then they had to use us in a campaign.
yeah,
This was a good, it was a good moment for us.
yeah,
Yeah.
yeah. Interesting. So I learned that StashAway actually surpassed 1 billion US asset under management in just 42 months. And to my knowledge, this growth was significantly faster than any other wealth manager in the world. Can we know how did you do that? What was the reason or the recipe for getting to this milestone?
So yeah, so we passed $1 billion in January 2021.
Yeah,
The recipe of that has been a complex puzzle. It's not that I have one little thing that worked out.
yeah,
I think first and foremost, I think we were solving a real problem.
yeah,
Like in the jog at the time we were in Singapore. We had Singapore and Malaysia. So at the time this was the two markets. So we were solving a real problem in Singapore and Malaysia. Two, people liked the solution. So we built a product that people liked. And as we discussed earlier on how we kind of really work with clients to get the product there. And I think this was incredibly important. Three, there was some luck. Markets were doing well, and so people saw returns. I mean, it is obvious that our product sells better when markets are doing well and
yeah, of
people make money versus when markets are not doing so well. So
course.
clearly, we also been quite lucky. And COVID in 2020, so maybe it's part of this. COVID 2020 had two effects. One is that the markets actually did very well after the disastrous March 2020, but then it recovered
Yeah,
very quickly and did very well. And two, people were stuck at home. They were not spending. They were not going to restaurants or buying clothes or whatever. So they were saving more than usual.
yeah,
Couldn't go to the bank even if they wanted to,
yeah,
which usually people don't want to, but anyway, they were kind of forced to stay at home. And so, a digital solution that enabled people to kind of put at work their extra savings,
Yeah.
obviously benefits. So there has been a bit of luck, if you will, which is always there, or you need to be there. But also, I mean, just the proof that the product was working well and was solving the problem that we were trying to solve.
Would you be open to white label or license your technology to banks instead of just competing, doing some partnerships?
Yes, we're not against that. We had a few discussions in the past, never came to fruition, mostly for a few reasons. The cannibalization problem I mentioned earlier. So banks at a certain point they say, okay, my God, do I really need to price it so low? Will it cannibalize what we do elsewhere? But in general, absolutely open to that. It's never going to be our core strategy. The core strategy has always been serve clients directly, where we think we can make the biggest impact. But we would be very happy to collaborate with a bank as well.
Yeah, I know you are nice enough to advise me. Let's say I am the head of private banking or wealth management at X bank, any parts of the world. What would you do different what they are doing today?
So, I mean, obviously, they have very different problems than mine, right? They manage probably very large amounts of assets. They have large amount of private bankers, and I am in a company. A lot of their money will be with clients that are on the older side, and so they want to speak with a person, with a private banker or an RM. I think where they are missing out is on emerging affluent or people that will be high net worth soon. So people in their 30s and 40s that prefer a digital solution that are they'd like to understand what they're doing a bit better, so they spend time reading stuff, or they they try to educate themselves. 'Cause now they have a bit of money, they have somewhere in the $1 to $10 million range, and they do spend the time to think about how to manage that money. So I think that's the segment that a lot of the traditional private banks are not attracting in a way that I think makes sense.
Yeah.
And maybe the way to do it is not to have a better digital solution within the bank, but maybe the way to do it is to have a separate solution owned by the bank with a fresher brand. And so maybe that's the way I would think about it. Like, build on the side something and with obviously a clear ability to then kind of migrate clients from one side to the other
Yeah.
as they grow, as they, change preferences, etc.
I know one of the banks in Kuwait who did this exactly. They followed this strategy. They built a standalone digital kind of wealth management platform. A team completely different from the ex
Yeah.
employees of the bank, in a different location, different mindset, different culture, and they succeeded in that. Yeah,
Correct. It's very difficult,
yeah,
but it's not easy because of everything you just mentioned. You probably need to separate it quite a bit. Otherwise,
yeah, yeah.
it's difficult. And if you this becomes a startup, right? So if you put
Exactly.
the constraints of a large bank into a startup will suffocate immediately. Will
Yeah.
never be able to breathe. And so you need to think about that. So it's not easy, and it's not easy, I think, for a traditional bank to attract the right people to do something like this, both on the business side as well as most importantly on the technology side. But that's what I would think about, because this is an issue that will come up in time. And so you want to be ahead of that.
Okay. So I want to go to the last chapter, which is about talent. So we build the best product, we find a way to distribute it, sell it, or market it, and then we need to scale. And obviously, scale is about talent. For me, I was so late to hire people, and when I hired the wrong people, which cost us a lot of money and in our business. How much time you spend on talent, hiring, retaining, working on the organization and so on.
In the early, let me maybe split it into kind of the journey of the company.
Yeah,
In the early days, so pre-launch, late 2016 and 20 and kind of until half 2017, an enormous amount of time. So both Nino and I we were hiring mostly engineers at the time because we were building the product, and both Nino and I were spending I don't know maybe 50% of our time hiring, like literally 50% of our time interviewing people. We had a very structured process, even if we were a very unstructured startup. I remember initially we hired a part-time sourcer in the Philippines that would actually kind of a source on, kind of send us LinkedIn profiles.
yeah,
And then we hired an intern that was doing that job. But Nina and I were the ones really talking to prospect employees and interviewing them. And we had a large cycle. So that was, again, maybe 50% of my time. Then after we launched, obviously that was not sustainable, but it was always, I don't know, 20% maybe, several hours a week of my time. So I now spend a bit less time, and sometimes we go back and forth on whether I should spend more time because I don't want to be the bottleneck. That's
Mhm.
the problem, right? So if I say, look, I need to interview everyone, then I become the bottleneck, and it
Yeah.
doesn't make sense. And I also want to, we have a very strong C-suite, and everybody in the C-suite knows, what type of caliber of people we need, and so I trust that everybody in the C-suite put the bar where the bar needs to be.
Yeah.
I now spend much more time thinking about the process of hiring
Mm.
versus hiring directly myself.
Mm.
And as in the last year and a half, I spent an enormous amount of time thinking about the process to the point that I was, we just recently changed the applicant tracking system, so the software that we use to kind of manage the process, and I was the one actually kind of proposing the software. Then obviously I left. The head of recruiting was the one that leading the final decision, but I was the one that brought kind of the new software to the table. I was very deeply involved into the testing of the product, etc.,
Wow.
because that shapes the process. Right,
Yeah.
the software shapes the process, and this was a kind of a new AI driven type of product. So that's how we thought about it.
Interesting because it reminds me of everyone is wondering how Elon Musk is able to manage 5 companies or 6, 7 companies at that scale with, massive markets, products, and so on. And it is about process. So what he does is he gets the best team around him, and then he's got a process at every company he's got, and things works like magic. Yeah.
Yeah, I look, I don't know what I mean. What he does is incredible, and
Yeah.
I don't think any mortal would be able to do that.
Yeah.
Definitely not me.
Yeah.
But yeah, and look, and it's also about empowerment. I mean, and you
Yeah.
need to hire great people, and then you need to give them the space
Yeah.
to take the right decision. And look, it is the most important thing to do as an entrepreneur is hiring the right people and giving them the right level of independency.
Yeah, actually, Steve Jobs also before he died, the last thing when they asked him what was the thing that you are proud most about building Apple, and he said the team that I put together. He didn't mention the product. He didn't mention iPhone. He didn't mention iPad or anything. He just said that the thing that I'm really proud of is the team that was around me and the people that I.
But look, at the end of the game, the product, the iPhone, whatever, is an output of that team. I mean,
Yeah.
I don't think like Steve Jobs is obviously incredible. I mean, once in a generation type of talent.
Yeah.
But at the same time, I don't think he built the iPhone by himself.
Yeah.
Maybe he was definitely very involved in the thinking. I was pushing the team, etc. But at the end of the game, there were a bunch of incredibly smart and dedicated people that
Yeah.
probably brought it to life. And this is true for any company of decent size. You don't need to be Apple. I mean, to need but a group of people to get things done.
So, talking about AI, you mentioned the software that to the company. So, part of what I'm doing for a living is we help traditional companies, incumbents, enterprises to upskill and reskill their people to
Yeah.
cope with disruption. So, if we have to put this in the context of banks, what we do is we try to help their people understand technology the right way, whatever senior people, executives, boards, middle management people, what to cope with the disruption that you are doing to them, which is providing a better way to manage wealth. For me, the maturity of AI is just getting better and better. Now we've got Gen AI. Obviously, we will see agentic AI or AI agents, and definitely we will see let's say AI agents managing a big portion of the work of employees. As Jensen said, we will see digital workers work hand in hand with employees. How do you see the future or workforces? And do you think once banks or traditional companies have that capability and that kind of tools, they will be able to cope with your disruption?
So I think it's two different topics, right? So I think I tend to be skeptical about new technologies. I am very bullish on AI. Like, I think AI is going to have or is already having gigantic impact on how professional workers
Yeah.
get their job done. And so I personally spend quite a bit of time experimenting for my personal productivity. And at StashAway, we are pushing everyone in the company irrespective of the role, on using to AI-enabled tool as much as possible and continue experimenting, etc. So I do think that it's gonna be incredibly important. I remember I was at a conference a few months ago where the founders conference, where it was a bunch of people like me in the audience, and whoever was the speaker, I don't remember, said, "You guys are gonna be the last CEOs that manage only people," which is a very interesting way to think about it, right?
Yeah, 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 yeah.
It's
Very interesting.
a very interesting way. I mean, and so the idea was, you're gonna have agentic employees in
Right.
practice, or digital employees. I don't know how you call them.
Yeah.
And this is probably coming faster than you think. And so this is happening. It's coming. It's incredibly disruptive. It will allow companies to do more faster, and it will allow every professional to get more things done. So
Yep.
it's going to be on each of us to hopefully leverage this as much as possible. How does it impact more traditional banks? To your question, in the same way, I think the banks will have the ability to get more done. Does it help them create a solution more similar to ours? I don't think so. As I mentioned earlier, I think the biggest gap is not
Technology.
technology.
Yeah.
Technology is more you want to do it. It's a puzzle. It's how you do the marketing, how you do the communication, how you fit it into your core product, how you uh, position it
Mm,
versus the clients. And do you want to actually position it, or you're worried about cannibalization?
mm.
So that those I think are hurdles that will remain there. AI doesn't solve them. In theory, they have the same ability of young companies to use AI to become more productive. The one thing that might happen is if you have to start StashAway today, you could probably build it with way less people,
Of course.
because you start with a pure kind of a, especially on not just on the engineering side, in fact, everywhere. You can actually build it from scratch with a smaller team, and so you can be more agile, faster.
Yeah.
So there's going to be a lot of companies that are going to pop up.
Actually, just yesterday, a company in Latin America, a digital bank on top of blockchain, Bitcoin and Ethereum, they raised 20 million US and they built a digital bank that now doing, I think, a million ARR with 6 people.
Yeah, it's crazy.
Complete digital bank. And they move millions of dollars between Latin America
Yeah,
and
absolutely
Europe.
crazy. Like if 5 years ago, you would have
It is
needed
it is
200
crazy.
people, not
It is
six.
it is crazy. So last question for you, Michele. I'm a big believer that we will see global banks, digital banks, distributed geographically across the world. So let's say Neobank in Americas, Revolut in Europe, Time Bank. I'm not sure if you know Time Bank
Yes.
in emerging markets and Southeast Asia. And then they will compete head to head with incumbents. Now we see Revolut is valued at almost 80 billion, which is more than some of the incumbents in the UK. So, do you think that we will see the same thing in wealth, which means we have a Revolut of StashAway, a new bank of StashAway, and they compete geographically and dominating those markets?
So I think there will be, yes, some digital players like StashAway that will be large enough to be considered an incumbent when you look at it 10 years from today and you say, well, who are the incumbents? Hopefully StashAway will be one of them.
Yeah,
Wealth management tends to be a very fragmented industry,
yeah,
and so there will always be a bunch of players. You're not going to have one player that dominates one single
mm,
market. But I definitely think that in every geography, there's going to be a few brokers and a few wealth managers alongside the main banks. I think some of the neobanks you mentioned will probably try to also launch their own wealth and investment proposition. I mean, most of them already have something.
yeah, yeah,
You will have, you'll have some people that prefer to have everything together and some people that prefer to have more of a specialist.
yeah,
And maybe there's going to be some aggregation as well. There's going to be some, banks that will buy some wealth managers and some wealth managers that will maybe buy some smaller banks. I mean, there will be some of this aggregation and consolidation over time. But I think definitely the way people bank will continue to evolve and will become more and more digital. And this is true for every part of managing our money, including wealth.
yeah. Thank you so much, Michele.